Hi everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chan. I am a chartered professional accountant located in Oakville, Ontario, Canada. And I'm on a mission to become the Google map for hardworking Canadians seeking financial freedom. Well, you and I both know that I've talked extensively about the capital gain tax proposal on this channel before, and I got lots of likes and dislikes and hate messages. And thankfully, it has been finally cancelled. But here's the thing. Tax policy is just one side of the economic equation. It has the power to enhance growth, fuel innovation, and attract investment. Or it can do the opposite and discourage economic activity, as we saw with the proposed capital gain inclusion rate hike. Now, from a macroeconomic perspective, tax policy is a tool. It shapes incentives, it impacts confidence, and it sends a signal about how a country values risk-taking and productivity. Today, though, we're zooming in just on the tax policies that have been announced so far by the major parties ahead of the April 28th election. And we'll walk through what they actually mean for you, dollar by dollar. But before I get started, make sure you give us a thumbs up if you like our video and hit that subscribe button so that you can stay on the latest tax tip. Now with that, let's look at both the Liberal parties and the Conservative parties' tax policy. Okay, first thing first, let's start with a tax policy that affects nearly every single Canadian out there. The bottom federal personal income tax rate. This is the rate that you pay on the first chunk of your taxable income, roughly the first $57,000 that you earn, minus the basic personal amount of $16,000 in 2025. For those of you who don't know, our personal tax system works this way. It is a progressive tax system. What it means is that the more money that you make, the more tax that you would have to pay. Now, our Ontario government is imposing this progressive tax system. So as our federal government, and specifically we're talking about the federal federal tax rate component. Currently, under the federal income tax law, for the first $16,000, you do not need to pay any tax. That's called personal tax amount. That amount you don't have to pay any tax on. If you make less than $16,000 in 2025, you pay almost no tax to the federal government. Now, if you make anywhere between $16,000, so anything above and beyond that personal tax amount, basic personal amount of $16,000, all the way up to $57,000, just slightly over $57,000, that delta of $41,000 is being taxed at 15%. The truth is that it's really being taxed at about 20%, but 15% goes to the federal government and the 5% goes to Ontario government if you are in Ontario. Now, that 15%, the Conservative government came out and said, hey, I'm going to reduce that 15% to 12.75%. 12.75%. Now, the Liberal government came out and Mark Carney said that he's going to lower that amount to only 14%. So there is an income tax rate reduction, and the Conservative is proposing to reduce it by 2.25%, and the other party is saying that it's going to lower it by 1%. So how much do you actually save under these two proposals? After you subtract the basic personal amount, well, the truth is that it really goes back to how much money you are making. Now, let me use an example here. If you make $30,000, your tax saving is going to be proportional to the amount of tax that you need to pay. Because out of the $30,000, the first $16,000 you don't pay tax. So you are only saving tax on the $14,000 that is subject to tax. And with Conservative government, you're saving 2.25% of tax, and therefore you're saving about $312 of tax. Under the Liberal government platform, you're going to save $139. Now, if you make $57,000, that $57,000 under the Conservative government, you're going to save $920. But under the Liberal government, you're only going to save $409. Now, for anyone who's making more than $57,000 out there, because this reduction in tax rate is only applicable to the lowest tax bracket, and therefore the maximum you would only be able to save is $920. Why would the $57,000 salary and the $90,000 or $160,000 salary have the same saving? Because these changes only apply to your first $57,000 of income minus the basic personal amount of $16,000. So everyone gets the same benefit on that portion, no matter how much they earn overall. Bottom line, this is a broad-based tax cut, and both parties are offering something. But the conservative plan saves you more, especially if you earn anything about $57,000. Now, the second policy we're going to look at is the capital gain inclusion rate. Now, let's rewind a bit. I'm sure everyone have heard me talk about this many, many times. In Budget 2024, released in April 2024 last year, the Liberal government proposed increasing the capital gain inclusion rate from this 50% to 67% for corporations and individuals with more than $250,000 in annual capital gain. Now, this was scheduled to take effect June 25th, pretty much 2 months after the announcement. But here's what happened. The legislation never passed. In fact, it was never introduced in Parliament. It was never heard. It got prepared, was waiting for the Parliament to read it and listen to it and pass it, but then political pressure mounted, and tax professional, investor, and business owners tried to push back. And the opposition leader, the Conservative Party, is pushing back and stalling the government, so this law never got read by the Parliament. Then, at that time, Justin Trudeau, our former Prime Minister, decided that it was time to step down, and Mark Carney just recently became the new Liberal leader as well as the Prime Minister. So on March 21st of this year, a few days ago, Mark Carney officially canceled this capital gain inclusion rate hike, calling it ill-timed. Now, Conservative Party on January 16 of this year, from early on, the Conservative Party took some time to really fully commit to opposing this particular capital gain inclusion rate policy. So eventually, the Conservatives blocked the government's progress, causing legislative gridlock and helped trigger the election. Now, let's not forget, this was a Liberal proposal in the first place. The government couldn't even get the legislation introduced. Now we have a new PM who had to walk it back and essentially canceling it and taking the credit for canceling it. But the reality is that the Conservatives was the first one who opposed it, and it has opposed it more consistently, and it's part of the reason we're having an election right now. Now, the third policy we're looking at is the GST on new housing. We know housing issue has always been a hot topic among politicians. So from the Conservative end, on March 25th, earlier, Conservative proposed to eliminate GST altogether on new homes up to $1.3 million. And it is available for everyone who buy new homes. On the other hand, Liberal, earlier on March 20th, they announced that they would also eliminate GST on new homes, but it's only on new homes up to $1 million. And make it only available to first-time home buyers. Now, you're looking at all these numbers, you're like, great, how much do I really save if I get to choose to buy a brand new home? Well, what it really means to you in dollar figure is that if you buy a new home for $1 million, the GST on that $1 million new home is $50,000. Under the Conservatives' plan, any buyer of a $1 million home would save that full $50,000. Okay? Under the Liberal plan, you would only save $50,000 if you qualify as the first-time home buyer. And if you're not first-time home buyer, I'm sorry, you still have to pay that GST. No savings for you. So the Conservatives' plan is way broader and higher value threshold because it's applicable for above all the way up to $1.3 million. And there's no restrictions to first-time buyers. That's a major difference, especially for move-up buyers or those buying in big cities where $1.3 million is just standard. Now, the fourth policy is the senior tax relief. The Conservative on March 26 announced that they would like to allow seniors 65 years old and plus to earn up to $34,000 tax-free. This is achieved by combining the basic personal amount and a boosted age credit. Now, on the other hand, Liberal didn't really have any specific proposal to answer to this one. But what does that really mean in dollar figure? Well, currently, all Canadians can earn about $16,000 tax-free. We mentioned that earlier. That's called a personal tax exemption or basic personal amount. That amount is indexed to go up every single year, but in 2025, it's roughly around $16,000, assuming your income is below $165,000. For anyone that's earning more than $165,000, the basic personal amount, the personal tax exemption, phases down to a minimum of $14,000. Now, the Conservative proposal increases the total tax-free income for seniors to $34,000, meaning that the extra $17,000 or $18,000, roughly $18,000, would also be tax exempt. So instead of the basic $16,000 getting tax exempt, now it's $34,000 getting tax exempt. So the seniors would be entitled to a tax saving of an additional $18,000 tax exemption amount. And that is equivalent to using the current federal rate, the lowest federal rate of 15%. That's a potential savings of about $2,600, almost $2,700. Now, that's really a real relief. Not just a small adjustments, seniors could save roughly about $2,700 per year in federal tax under this policy. So for those living on fixed incomes or modest pensions, that's a significant difference. And this one's targeted relief for seniors, only offered by Conservatives so far. Okay, the fifth policy that we're comparing between the Conservative and also the Liberal is carbon tax. I don't know if you guys remember carbon tax. This covers both consumer and businesses carbon tax. Well, let's not forget, it all started with Liberal Party that introduced the federal carbon tax in the first place. It was a signature part of their climate policy under Justin Trudeau. And the tax was meant to put a price on pollution and return the revenue to Canadians through the carbon tax rebate. And then, this is called climate action incentive payment, that some of us get a check at the end of the year or during the year for the rebate part. Now, the government spends significant resources on administering this whole brand new policy that was introduced by Justin Trudeau, including hiring thousands of public servants to just manage the collection and then issuing the rebates at the end. Now, but fast forward to 2025, on March 14 and again on the 25th, the Liberal government, represented by our Prime Minister, Mark Carney, announced the consumer carbon tax would be temporarily reduced to zero. So you and I would not have to pay any carbon tax temporarily. Now, using something called an order in council. But this is not because the legislation has been repealed. It's just because he's just using his power to stop it for a while. Now, the law is still on the books. And the reason why he's doing it is because he's citing that there is rising affordability concerns and political pressure. Now, Carney also announced additional green initiatives like EV rebates and home retrofit programs from this clean energy perspective. Now, on the flip side, the Conservative Party promised if they get elected and they come into power, the entire carbon tax system, both for consumers and industrial or businesses, will be all gone. They are going to can this whole carbon tax together. And their message is consistent: axe the tax. Now, from the business carbon tax perspective, the Liberal Party, what their campaign platform is saying is that they plan to expand the carbon pricing, carbon tax on a large business scale. So they're going to tax businesses on their emission, on the carbon tax. They're going to increase that carbon tax, whereas they are temporarily relieving, putting a stop on the personal consumer side, but they're going to tax heavily, increase the tax on the business side, which I don't know how it's going to help our help our Canadian economy, but that's what they're proposing. Now, on the other hand, the Conservative Party on March 17 said that they're going to repeal the federal tax for everyone, including businesses as well, and they will leave it to the provinces to leave them to create their own framework to, if they want to implement any type of tax regime on pollution. Now, the Liberal carbon tax, once a flagship climate measure, has now been zeroed out by their own Prime Minister. I mean, he was the one who introduced it to begin with. He put a temporary hold on the consumer side, and now he's also going to increase the business carbon tax going forward. But this structure still exists, and he's actually going to expand it for the businesses. Meanwhile, the Conservative Party are pushing for a clean slate, full repeal, and provincial control. So the difference between the two parties couldn't be any clearer. I mean, for someone who is also operating a business, to me, is huge. So I'll leave it up to you to decide what you want. Okay, number 6, RRSP and RRIF, conversion age. On March 26th, the Conservative Party announced that they will delay the mandatory RRSP conversion from age 71 to 73, giving retirees more control, whereas Liberal hasn't announced any changes yet. Well, why does it matter to you and I? What is RRSP and RRIF anyway? RRSP, a registered retirement saving plan, is a tax-deferred saving account. You contribute pre-tax dollars while working, and the money grows tax-free until you withdraw it. And once you turn 71, you're required to convert your RRSP into a registered retirement income fund account. From the year you turn 72, the government forces you to withdraw a minimum amount every year, which is going to be taxable income. So it's being added to your personal tax return at the age of 72. You don't have a choice. You can't plan it. Minimum withdrawal amount is being taken, and it's automatic withdrawal transfer to your regular account. A common rule of thumb is that in your early 70s, you are expected to withdraw amounts 1/20th of the RIF each year, which quickly adds up and trigger taxes, even if you don't need the cash. So the Conservative government basically proposed to delay this from 71 to 73, meaning that seniors get 2 extra years of tax deferral if they want to. It gives retirees more control over what they withdraw and when they get taxed. It might not seem huge, but for those managing large RSPs or trying to coordinate with CPP or OAS timing, it can be very helpful planning too. So far, we have not seen any proposed changes from the Liberals. In closing, if you are a taxpayer, which we all are, this election matters. These tax policies impact your wallet, your investments, and your retirement. But let's zoom out for a second. Tax policy is just one side of the equation. What we haven't seen much of, particularly from the Liberals over the last 8 years, is meaningful investment in the kind of infrastructure, trade, and economic enablers that truly move the needle on a national level in terms of competitiveness. Here's what's worth paying attention to on top of the tax policies. Well, the Conservatives have committed to reopening and expanding energy infrastructure, including the pipelines, the LNG plants, and refineries. They're also promising to remove interprovincial trade barriers that act like a hidden tax on Canadian business. And they've signaled support for small businesses by proposing tax reforms that bring investment back home. On the other hand, the Liberals, under Mark Carney, have proposed a $2 billion investment fund to boost Canadian automotive manufacturing competitiveness. There are also discussions about streamlining resource project approvals and reducing internal trade barriers, though execution remains to be seen. So far, most of the tax proposals we've seen, while important, are relatively small in terms of impact on long-term growth. What Canada really needs is a long-term strategy that encourages investment, boosts productivity, and unlocks innovation. That's the bigger picture I'm watching. Well, I'll keep you posted on the latest tax policies so that you can make an informed decision on April 28th. Until next time, happy Canadian real estate investing.